Buy Yes Bank and you'll double your money in 2 weeks. Guaranteed. Those are the kind of tips that I don't listen to anymore. Well, not anymore, because I used to at one point in time, and then I lost a lot of money, and then I decided I've got to be a little more systematic. So, how do I pick the stocks that I am going to invest in for the next couple of weeks to the next 20 years? Hello, folks. That's what we are going to look at today, stock picking. So, to know whether or not I should invest in a company, I would need to know everything about the company. Now, is it possible for me to know everything about the company? Well, if you look at Scam and the Harshad Mehta story, you'll see that he used to go and talk to the employees of the company and get detailed information about the company. But come on, I mean, in today's world, it's not really possible for us to do all that. So what I usually do, and I used to go to moneycontrol.com earlier, but lately I've seen that Money Control is full of advertisements and it's very cluttered and not very user friendly. So I found a new site here called screener.in. And if you go to screener.in, it's a very efficient and nice website. And I got a stock tip from a friend today. Yes, I talked about stock tip and I don't listen to them on the face value. But what I meant was I don't listen to them on the face value. I would have to go and do research myself. So a friend of mine told me that there is a company called Astral, which is excellent. And I did the research on Astral just this morning, so I thought I would take it as an example. So if you search for Astral, you'll find pretty much quite a lot of or sufficient amount of information on the company. What the company does is, as it says, Astral Polytechnic was established in 1996 and so on and so forth. But primarily it's into pro-India plumbing and drainage systems in the country. There's some more information here. 77% of its revenues come from the, from the business of manufacturing pipes and fittings. It has a 100% stake in Rex Poly Extrusion Private Limited for manufacturing corrugated and plastic piping solutions. It has also recently ventured into the adhesive business and so on and so forth. There's a chart, but we'll go into the chart a little bit later. There are some pros and cons mentioned by Screener about the company here. One important thing is that the company is almost debt-free. Company is expected to give a good quarter, it says, and the company has delivered a good profit over a period of time, which we will look at in just a bit. If you do a peer comparison here, the company is doing exceptionally well as far as its peers are concerned, and you can do a quick comparison of the numbers. As far as market cap is concerned, it's the leader among its peers. Let's look at the quarterly results since June 2018. The company has increased its sales over a period of time and has done exceptionally well. In June 2020, it saw a little bit of a dip here, but then it immediately picked it up from where it had left off in March 2020, and then it has continued to rise. The net profits have also increased over a period of time. Same dip we see in the net profits also in June 2020, but then it picked up from where it had left off. So in March 2020, it had a 51 crore profit. In September 2020, it had an 87 crore profit. So pretty decent, I would say. This is the profit and loss. You can go into a little bit more detail as to what are the operating profits and what is the profit before tax and net profit and so on and so forth. And the idea is to look at what the patterns are. If the patterns are up and down, then it's not a very good sign. If the patterns are that the numbers are consistently getting better over a period of time, it says that the management is doing a good job in running the organization. And then we have the balance sheet. The balance sheet talks about assets and liabilities. That is the most important information here. The liabilities have increased over a period of time. And contrary to popular belief, increase of liabilities is not always a bad sign. It also means that it is able to take money from the markets and from the banks and increase its liabilities to, increase its turnover and the top line. As you can see, it's not just the liabilities that have increased, the assets have increased as well. So, there's a good, healthy growth overall. Yeah? The cash flows also look pretty good. Again, you don't need to understand in detail what these cash flows mean, as long as you can understand that the pattern is good, and the numbers are getting better over a period of time. If the cash flows are also up and down, or the ratios, as you may call it, return on capital, return on capital, or debtor days, or inventory turnover, if the numbers are up and down, then that's a problem. That's a sign that there's something wrong. But here, if you look at it, the numbers are getting better. Like, for example, debtor days, the lesser they are, the better it is. What it means is the company is able to return the money that it borrows from its debtors in a very short period of time. And in March 2020, the debtor days were 88, and over a period of time, the debtor days have reduced to 32, which is a good sign. But one very, very important factor when I look at these numbers is what is the promoter share in the overall stock holding of the company. And it's a good sign if the promoter holding is increasing. Now, in this particular case, the promoter holding has reduced from 58.49 to 55.74 in September 2019. Having said that, this reduced number has not gone to the public. If it goes to the public, that's a very bad sign. It's a big flag raised that the promoters are basically selling off their shares to the public. But the share has gone to foreign institutional investors and domestic institutional investors. What that means is FIIs and DIIs, which are institutions that invest regularly in the capital markets, are hopeful about the company and they want to get a bigger share. They want to increase their investment in this company. And that's a good sign. And they've picked up from the market and they've picked up from the promoters as well. And if you look at the public, it was 14.34 and now it's 13.87, which means the FIIs and the DIIs are picking up the shares from the public and from the promoters, which is an excellent, hopeful sign. Now, looking at these numbers, and there are a few other numbers that you may look at, like, for example, whether the company is giving out dividends or not, whether bonus shares are being issued or not, and so on. But and that's also a good sign. But if they are, but this is sufficient for me. I mean, I don't claim to be an excellent fundamental analyst because I depend more on the technical analysis of the stock. So let's quickly go and take a look at the technical analysis of the stock, and if the numbers show that the company is good, then that would prove that this is a good company to be an investor in. Which raises another question. Is it a good price today? Because if you look at the pros and cons that Screener mentions, the con is that the stock is trading at 19.24 times its book value, which means it is expensive at this point in time. And you don't buy a stock when it's expensive, you buy it when it's cheap. And technical analysis is going to help us in understanding when to buy this particular stock, when to get entry. So let's get into the technical analysis of this stock. So this is the monthly candlestick chart of the company Astral Poly Technic Limited. Now, if you look at it, it went public in about 2008, and since then it has consistently given growth and very few dips. There are a few dips, but they have been recovered very quickly. And especially since the year about end of 2019 and after the COVID crisis in 2020, the stock has really, really picked up. It's gone up really, really fast. This essentially tells me that it's a good stock, and if you invest in this stock, the projection is good. I mean, it's gone up considerably, and hopefully it will continue to grow up, especially added up with the fundamental analysis that we've already done. And then added up with the product that it manufactures, which is corrugated pipes and plumbing and Pro India plumbing. I think it's a product that will never go out of demand. We will always require, pipes and plumbings, and it's very, very fundamental to human life. So the product is good, the numbers are good, the management is doing an excellent job with running the company. The charts look decent. It's given consistent growth over a period of time, which tells me that it's a good company to invest in. Now, the question is, when should I enter? When should I purchase? Because at this point, it's touching the upper Bollinger Band, which means it is expensive at this point in time. The RSI on the monthly chart shows me at 74.31, which is extremely expensive. So what I would do to identify a good level at which I should buy. And I've talked about levels and about how to read a candlestick chart in another video. And I'll share the link at the end of this video as well as in the description of the video so that you can go and refer to it. Um, let's look at the daily chart so that we can understand what would be a good level to enter. Now, like I saw in the monthly chart, I also see in the daily chart that the price is touching the upper Bollinger Band, and the RSI at this point in time is also the relative strength index is also at 62.47 here on the daily chart, which is expensive. So the basing candles, I see a few basing candles here, which means this forms a pretty decent level. Also, I see a quick jump that happened from this level. So let's see if I can, draw a line here. Uh, it's 1316.05. I think that would be a decent level, a little bit up and a little bit down. It's far away from our current price at this point, so I would not purchase this stock today. I would wait, and if it doesn't come down to that level, then we'll try to see, and if new levels are created, then we'll see at that point in time how the stock is and whether we should enter it or not. But at this point, it is very expensive, and I would wait for a while until it becomes a little bit cheaper. It comes down, the relative strength index comes down, it touches the lower Bollinger Band, it comes close to another level that may have formed, in the future, and then we'll see. That is also a stock tip of the day. Today, you will not be able to buy it immediately, but it explains the tips that I give. It explains why a stock is good and why and when we should be entering. I hope you have enjoyed the content today, and I'm always looking for feedback. So do let me know if you find, if you have um, disagreements about what I present, or if you want me to cover some ideas. Other than that, I wish us all the best of luck, and I hope we make a ton of money on the stock market. Have fun.